Hey TMFG community, Carlo Cansino here with John Iaconetti. And in today's Ask TMFG episode, we'll be discussing interest rate movement and its impact on real estate. So again, if you do like our content, please do subscribe to our YouTube channel, provide us with a like, or provide us with a comment. In today's episode, we'll be discussing how interest rates impact the real estate market. We've seen a lot of interest rate movement over the last 24 months and a lot of movement, corresponding movement in the real estate market. We'll just talk about why that is, how interest rates impact real estate prices, and try to give some sense of understanding of what's going on in the real estate market.
Perfect. Thank you, Carlo. But just like you mentioned, real estate has been an incredibly hot topic, really in the past little bit in Canada. Really, as far back as 2015, real estate prices have really begun to take off. And now we're in this period where we're in a higher interest rate than we've had in really our most recent history. So what does that mean for real estate prices as we begin to move forward? Well, in 2022, interest rates began to rise, not only in Canada, but in the US as well. And that continued into 2023 also. We're starting to see that impact it had on real estate markets as purchases and sales of homes had really begun to cool, and therefore prices have begun to slow down in most parts of Canada. Now, when it comes to real estate, there's a lot of supply and demand that also plays a role into it, with a lot of Canadians staying in the GTA region. GTA home prices probably have outperformed that of other areas. But so far, prices have begun to slow down and sales have begun to cool off. Now, as we head into 2024, we've already begun to hear about some potential rate cuts happening in Canada as well as the US. And that's already starting to spur some consumer optimism. There's a lot of people already starting to think about, okay, well, now might be the time to either sell my home or to buy or to get into the real estate market. And now that's leading to the expectation of housing prices beginning to go up again.
Yeah. In general, there's a inverse correlation with interest rates and prices for real estate. When interest rates rise, typically that puts more, that increases the cost of borrowing. So there's going to be less people out there looking to borrow to buy homes. When there's less people looking to buy homes, that's less demand on houses or inventory that's out in the market. So if there's less demand, prices will start to come down. Again, as John mentioned earlier, there could be some rate cuts as early as the second quarter in 2024. If we do see rate cuts occur, that means borrowing is cheaper. Then those people that are sitting on the sidelines will look at that as an opportunity to get back into the real estate market. More people in the real estate market pushes prices up. So that's where we're seeing that confidence in the market that John was talking about. Interest rates coming down means people will be willing to borrow, whether it's for houses, maybe it's for cars, maybe it's for doing renovations. That's going to spur activity in the economy, which is providing that optimism in the economy, and that's what's happening in the market. We're seeing that happen in the market. We're starting to see the market take off because it's already building in the optimism in the economy.
At the end of the day, our focus has always been control you can control. You may have heard it in past videos, and that focus is, still continue to save where you can or pay down debts where you can until interest rates begin to correct themselves. Maybe it's quarter 2 of 2024, maybe it's into the future when we start to see those rate cuts, but still continue to do what you can. And just like the stock market, the real estate market is going to be pulled in different directions, typically upward trending, as you know, in the GTA. So as long as you're able to cover your cost of borrowing, continue to save along the way, this should not be too big of an impact leading up to your retirement goals.
Great. Thanks for summarizing, John. That's our episode for today. Again, if you do like our content, please do subscribe to our YouTube channel, provide us with a like, or provide us with a comment. Until next time, I'm Carlo Cansino.
I'm John Iaconetti.
And this has been Ask TMFG.